So I put this picture up of a brain walking the guy. You guys heard me talk about this a long, long time ago and multiple times, where you're either walking your brain and controlling your thoughts and your emotions, or it's walking you. It's one or the other. All right. And if you're in control of your thoughts, then when you're supposed to get mad, you don't get as mad. When you're supposed to do different things, that's the path of least resistance. And as humans, we're weak at, you're able to control, distract yourself, and not go the distance. If you're struggling to control your thoughts, as soon as something tests you, you fail. As soon as something tests you to see if they could get you to get mad, you do. Path of least resistance. As humans, we all have a lot of paths of least resistance to anger and frustrate us all the time. In trading, it's testing us. And I don't mean your position. I don't mean you're long from 13 even and it goes to 16 even and then back to 13 even and it's testing the entry. I'm talking about testing your resolve. It's testing your ability to get mad, to stay mad, to not get frustrated, not press, not events trade. It's always testing us. But a lot of things do. It's not just traders have this cross to bear and nobody else does. Everybody has pressures. Athletes do, trying to perform, trying to stay in shape. They are um, both frustrated physically and mentally, competing for their job. You think, oh, they make a lot of money to play a sport. That's great. No, that would be great. They didn't have to do much work to stay at the top of their game, and they never took criticism, and they didn't have anybody competing for their job, and they didn't have anybody looking to break their legs when they drop back to pass. Yeah, that'd be great. So there's always these challenges in every industry. And often we just think it's us. Oh, trading, are the only ones that have to do this or go through this. It's everything's a performance sport. I'd say that trading is everything's a performance sport. And then it's like trading education. Every time someone's new and they don't know much about me and they'll say, oh, a lot of trading educators, they do this. They say, guess what? Every business, most people who do it suck. Every business, most people who do it suck. It's not you're special that you found just the one industry where most people who do it suck. Everybody, 80-90% of people get away with doing their job poorly or just adequately or just enough to get by. All right. So I put this picture up and it's usually where you find yourself when you're in a trade, when you're in uh, maybe the day, right? Period of time. It doesn't just have to be a moment. Your brain's walking you and your thoughts are walking you. It could be a period of time because of the different challenges that seem like they won't stop. And everybody has those their own crosses to bear, is one of the sayings, right? So it's one of those things where you're either going to control your thoughts or they're going to walk and drag you around like this image suggests. Now I say this because, and I'm going to take I'm going to leave the picture up and I'm just going to draw on it for now. I don't think it's worth $349. I'll have my neighbor across the street draws one. But I think it's a really interesting picture that when you look at, think about, you're like, you know what? That's me sometimes. And not just in your trading, but it could be in your everyday life. But let's bring it down into trading. Let's walk it down. I mentioned this in the trading room today about what I was going to talk about in this coaching session. And I want to stay focused. I'm trying to get a couple guys in here also for these sessions to talk about what's in between our ears a little bit more. And the reason is, you've heard me say this before, that trading psychology is important, but it's useless if you don't know what you're doing first. If you don't know how markets work, how price and why price moves, and the different tool set that you need to create the ability to predict price, well, the trading psychology isn't the missing piece yet. A lot of people never learn the right way to trade. They're struggling and they think that it's the psychology piece that's missing, and they buy books and they try to fill that void. That is not the missing piece. You got to know what you're doing. At some point, the doctor had to go to med school, right? The analogy I always give is if I'm on the operating table and I start to flatline, I don't want the doctor or the surgeon breaking into breathing exercises and yoga to relax. I want the son of a bitch to know what he's doing. So you got to have that default so you could react. So the tools have come such a long way. We want to focus on what's in between your ears that's keeping you from being able to diligently react to decisions or ideas, to miss a trade and not give an SHIT about it, or give as much of an SHIT about it as you used to do in the past. If you're not confident, you get really mad when you miss a trade because you're not confident you're going to catch the next one. You're not confident you're going to see the next one. So know that it's a confidence issue. It's not that you missed the trade. It might not even be because you weren't watching enough. It's just you're not confident you're going to catch the next one. So get confident, and then you'll actually get better at not worrying as much about missing a trade and doing something stupid afterwards. So we talked about like the ABC in the prior session, where when A happens, B happens. When B happens, C is throwing the mouse on the floor, and then D is throwing the monitor out the window. Everybody has a progression. Try to stop it at B. Try to stop it before the you know what hits the fan. But you got to trade yourself as much as you're trading price. And you got to know, just like you have to know why price moves, you got to know why Jeremy or Jim or John or Joseph, Kyle, and Matt, and Nick, and Ron, Stan, Vern, all the other guys that are in this room, how and why you tick. That's where everybody's got differences, right? Everybody's got different paths of least resistance. And I didn't have to go to school for psychology to know this, just being in this business that's very psychologically driven for 25 years, coming from the floor, coming from a prop firm, and then coming from talking to thousands of people that have zero experience to a lot of experience and everyone in between. And then working alongside Market Delta, knowing how the software business works and how people come into the charting world and thinking that that is the piece they're missing. Well, if it's got a couple tools on there that are important, it might be, but generally charts should be something that you set them up, you got your tools on, and you leave them that way for a long time. You make little tweaks to it, but you're not changing your chart displays constantly. You're not spending weekends rebuilding a chart, adding this, doing that. You're wasting time. It's like, you know what? You remodel your kitchen. You don't paint it 3 times a year. You don't remodel it 3 times a year. You don't change the cabinet handles 4 times a year. You know what I mean? At some point, you got to enjoy it. You got to use it, and you got to get used to it. So, the point is, we're all a victim of this picture, whether it's inside a trade, inside the day, or outside the business and in the grocery store. I had to, as part of, and I don't want to get, I don't like to get too personal. There's a lot of good people I have in this room that I'm close with, but I have a lot of people know my situation. And last night, last couple of days, my dad who's in Florida has to come home. He's not doing great. And he was great for a while, last couple of days. So we got to get him into the doctors. Plane's delayed, 2, 3 in the morning. We get him back. And I bring this up because before that, I go to the grocery store. And I just give you an example. I'm gonna tie this right into trading to get groceries to get their fridge filled up. My other brothers are at the house setting back their cable and just getting the place ready for him to come back. And I go to now I don't go to the grocery store much. All right. You're looking at a guy that just I'm not that guy, right? I go to grocery stores, but I'm not the shopper. I'm not the shopper dad. But I know how to get around a grocery store, and I got a list. And I go to the lunch counter, right, for the meats. And I say this, that, 2 things or 3 things, and the guy cuts it. Nice. And he doesn't say, is that it? I said, I got a couple more things. And he goes like this. And I think that didn't just happen. That did not just happen. I got to have a camera on me. I got to be tested here. And I go, What? I said, I only gave you a couple things. I got a few things here. Yeah, I know, but I'm supposed to be leaving soon. That's, I go, this got to be a setup. Got to be a setup. They'll give me somebody else. So I controlled myself where the old Tony would have probably told the guy where to go. I didn't go to the counter and tell on the guy or anything else. I thought, well, maybe the guy's just an ignorant guy or what else. I'm just going to get this stuff. I'm getting out of here. I'm not going to let him affect my night. Point is, that was a test, right? That was a test. And we're all tested that way. Sometimes you can't believe it. So you got to build momentum passing those tests. You'll build up momentum in trading by passing the test. We're in the past. You did something stupid, and this time you don't. Doing something stupid could be saying something stupid. In trading, it's an avenge trade after a missed trade, or it's a bad trade after a bad trade, meaning it's an avenge trade after a bad. I mean, avenge trades can come from missing a trade, can come from taking a bad trade, and then just not giving an SHIT. And when you not control yourself, you put yourself in this position where the brain's walking you. You're always on the cusp of doing something dumb. You're always doing something, that one trade that's going to blow 5 or 6 winning days, not trades, days. And it's like, why did I just let that one trade create 5 or 6 additional trades that are poor? It's not that big of a deal. And then once you start building momentum that you're not doing what you used to do, you get to a point where you never do that again. And it was an old habit. You forgot you even had that problem. But you got to start somewhere. And it starts with recognizing this picture, because we're all like this at certain points, inside and outside our office, inside and outside of trading. Okay. You got to, and this is one of the values I have for people, is that I talk to so many people. It's like I'm a reservoir of experience, asking so many good questions when I talk to people, getting different perspectives and experiences, helping different people that have different problems. Something had come up where I wanted to expand upon it today. And it was, as humans, all right, I'm not going to write this out completely because I don't have a pen, just a mouse. As humans, we look for things to confirm our trade. All right, follow me on this one. As humans, when we're in a trade, when we're in the trade, we're looking for things to confirm that trade. We're not looking to disqualify it. We're looking to confirm the trade, not disqualify it. We want to confirm it, not disqualify it. We want positive reinforcement, not negative. What'd you do? Get out. Wait a second. I'm long. It didn't go to my target. Yeah, but there's some objective reasons it's not going to go to your target. Yeah, but nothing. And the market's down here. If it's hindsight, there's nothing you could do. If it's not, and you're allowing some objective instances, that it's not that you ignore them. And this is the key to how this conversation went. It's not that you ignore it. It's that we tend to decrease the weight we give to it. Let me say this all again. As humans, we tend to look for only things that confirm the position, the trade, not that disqualify them. Again, we see the disqualifier, but we give it less weight. Why? Because God forbid it disqualifies our idea, our opinion. Remember, trades are ideas and they're your ideas. You got to do a better job at disconnecting your emotional attachment to it. Because if it's your opinion and it's what you stand for, you're going to be emotional. That's why politics and religion are such and always have been heated issues that when people talk about them, they get emotional. Why? Because it's a stance that they have. It's a rigid stance that they have and a position they hold that if you don't agree with it, you are attacking their very core. You might as well be cracking their kids around. In a way, they feel like this is important to me and you don't agree with it. That's why it gets so emotional so quickly. Well, think about trading. If you have an open position and you're long and you put so much importance into that long position, this is where I stand. I'm bullish and I've worked a long time to create this strategy to tell me that the market's going to go up for X, Y, Z. And you know how many books I read? This is my position. I'm long. God forbid anything come along to tell me that I'm a little early or I'm a little late. I'm just dead wrong. Now, all of a sudden, we're pissed, or we're pissed faster, or we're more pissed than we otherwise should be. Why? Because we have a stance and some sort of direct connection, tie, bond with a stupid trade. Stupid trades. That's a phrase I used a while ago. Stupid trades. Stupid trades. And I don't mean literally a stupid trade. Like that was a dumb trade. No, I mean every trade you take is stupid. It's going to help you detach the emotional bond that you shouldn't have with it anyways. They're not other people. You want to have a great relationship with your kids and your spouses and your friends and your family and your siblings. Work hard at that, not effing trade. The stupid trade. You're right, you're wrong. I'm looking at someone's stats who's wrong a lot, but his winners are big. It's amazing. He's got a really shitty record, but a green P&L. It's a great position to be in. Shitty record. So record-wise, he might be 3-6, 3 winners, 6 losers, but he's up money. So now if he goes, 4-4, or 6-3, he's really, so he could be wrong a lot and still make money. It's because of good location, number one, and because of bigger winners than losers. But you only are able to get bigger winners than losers if you're in good locations. Everybody wants a bigger winner than loser, but you're only going to get there if you have good locations. If you don't have good locations, you're not going to squeeze bigger winners out of, and you're not going to be able to have a small loser. The point is, if you're attached to your trades, then this record being wrong 6 out of 9 times, I'll beat you up. If you're emotionally attached to being right or being wrong, it's a stupid trade. It's your stupid trade. It's my stupid trade. It's our stupid trade. Who gives a shit? They're stupid trades. Again, not literally, that's a dumb trade. Figuratively, the thought of, hey, if I'm here a long time, this is one of tens of thousands of trades I'm going to make throughout my career. Why would anyone be that important? If I'm going to be here a long time, this is one of tens of thousands of trades I'm going to make throughout my career. Why would one it be that important? And the answer is it's not important. You're the one making it important. For some whatever agenda that you have and path of success you think you should be on by now, whatever the pace is of you getting successful and turning the corners, the pace and the rate you should be on. A lot of people think they started trading well before they really started trading. Are you a doctor? Are you a doctor before you go to med school? Are you a doctor when you're in med school? When did you start becoming a doctor? At some point, it isn't when you're in class, and it isn't before you went to class. A lot of people trade and they think they started trading when they opened up an account. Most of the time, that's the furthest thing from the truth. You didn't start trading when you opened up an account. That just got you, you just bought yourself on the team. You don't know how to swing a bat. You don't know what hand to put the glove on. You don't know what a bat looks like. You don't know what a batting stance is. You don't know what the defensive positions are, let alone strategy of the game. How about we figure out there's 9 positions, 3 outfielders and 4 infielders, this thing called pitcher. before you start getting into the strategies of the game. And so many people, through no fault of their own, most of the time, go down rabbit holes and they don't know what they don't know. And they're thinking they're doing something. They didn't start trading when they think they started trading. So then they get their timelines all screwed up. And then they're just more frustrated. I always remember this really shitty accountant I had, only for 1 year because she was bad. But she said something that was profound. She said, well, 100 years from now, we'll all be dust and it won't matter. Because it was something that was kind of small that I was talking about, worried about. She goes, it wasn't even a financial thing. I think it was something outside of whatever. She goes, 100 years from now, I'll be dust. But I thought of it a different way and looked at it as, you know, how many times do you worry about things that never were worth worrying about? Now, that's easier said than done. And I'm not that guy. Don't sweat the small things. Everybody says that. But the same guy that says that gets in his car, drives down the street, and someone cuts him off and he's giving him the finger and yelling at him and wants to beat him up. And 10 minutes before, he says, don't sweat the small things. Show me. Don't tell me. When the guy behind the counter goes, when you ask him that you had another order and you didn't yell at him, that's momentum. I got to be honest. I didn't yell at him, but I did tell him I should go up to the front and tell whoever's in charge of this place that right now you suck at what you do. So he goes in the back room. Let me expand on this story. He goes in the back room to get Boar's Head, I think, was the next order because he didn't have any. And that was another thing. I think he was mad. He was getting ready to leave to go home for the day, and he had to go in the back room to get the Boar's Head. He probably spit on it too. No, but it was in the plastic. And his other partner behind the counter says, go to the counter and complain about what he just did. I says, why? Is he like this all the time? He goes, yeah. I said, so I got to waste my time helping you and other customers. So he came back. I says, I should go to the counter and complain about you. I said, you're like this with a lot of people. And you got the wrong guy upset, but I'm not going to get upset. Let's just get through this. We got through it and we left friends. And I didn't tell on him. I ain't going to deal with him. Anyhow, I felt like a camera was on me. Like, how is this guy going to deal with the mean meat guy? I probably got a B minus. I didn't get an A plus. I probably got a B minus. And that was last night. But going through the stupid trades, every trade's stupid. Some trades are really stupid. Don't think I'm making that literal, because I do like when I work with people, I have them send me stupid trades that they make, like really trades they knew that they had no business taking when they took them, and they still took them. And people are surprised that there were one or two stupid trades that take a week, cost them a lot of money, and they knew they shouldn't have taken it at the time they took it, and they still took it. And now their statement looks a lot different. Who do you blame? I guarantee you now you could assign blame to someone who deserves it than to something that doesn't deserve it. Stupid trades. When I say that, it's figuratively talking about if you want to detach, and you should detach yourself emotionally from every trade, just think of every trade as stupid. But there are real stupid trades that you make, and they're generally made and influenced by your lack of emotional control, like this image. I try to create imagery and analogies to paint this picture, and then repetition. And I think taking some of these coaching sessions into the psychological way are going to help people, because listen, the tools are there and they're growing and they only get better. And it's putting everybody in the best position to be consistent. And you're in a good spot because there are no platforms that have this. There are no platforms that even claim to have it. They don't even realize it. And I'm talking about the Ninjas, the Sierras, all the charting applications out there. There are giant prop firms that don't have it. And I don't want to get into knowing guys that used to be at these prop firms, and what they were trying to get is what we have with this puke tool, the ability to see where people get in and get out, and the collaboration that it took to get there. So, point is, that's going to help you calm down. And I want to circle back to one thing, and that is this quote that I wrote, and I just want to go over it one more time. As humans, we look for things to confirm our trade, not disqualify our trade. You saw it, you didn't ignore it, but you decreased the weight you gave to it. That is the profound part of that whole back and forth I had with someone yesterday. It's not that you ignored it. Yeah, I've seen that. Yeah, I know you've seen it but you decreased the weight you gave to it. And then sometimes you just flat out ignore it too. Let's not kid ourselves. Sometimes you just flat out ignore it. You know what I mean? Because you need it to work. It's the third trade and you need it to work. Now, let me get rid of some of this. Let me go over this one more time. And I happen to be drawing the picture in the recording of a guy walking his brain instead of the other picture, the brain walking him. And by the way, why does it say cat man walking brain? The brain's walking him. But this is a really important image that you could adapt or relate to everything that we do. We're only here, man, not even a calculable amount of time. It's so small, you can't even calculate the blink of an eye, the millisecond of a blink of an eye that we're here. And you hear it all the time as far as don't sweat the small things and make the most out of it. Time flies. And, but, at some point, you want time to fly. That means you're having fun. All right, let's go to this recording really quick because I got to show this. One thing I have learned is that repetition isn't important, it's imperative. I'll get and the highlight that I showed in the trading room today was, and this is what you should do on recording, is I'm going to look for this spike right here. So I just take the slider and go back to that spike right there. And what I said, and I'm going to say it again, repetition's important. It's not, wait a second, this wasn't the one, but this is the same concept. Where's the one that we talked about? It was, I'll show both right here. If you were short, even if you were short with some money into it, so you're short from up here, got it? And you're like, well, should I get out in here? It's this POC. I don't give a shit why you wouldn't want to get out. You'd be like, no, it's balanced. All right. You don't see anything to get you out. Well, it just flipped, more shorts than longs. And then a big short. I mean, not a big short. I'll say it right. Big seller, 150 lot market order, sell side. It's pink shorts. It flipped and then it pops. Is that in hindsight? Is that a coincidence? That it went from more longs than shorts and then it does that? Did you see that and just didn't really care because you were looking for lower prices and the market went from a winner to a scratch to a loser and you had to chase it? And then look at this. And this is something that you'll get better at seeing more than one thing. But watch this. There was that little flip in this chaser that it's subtle, but there are no grays down in here. It's all motivated buyers. All right. So right in here before it rallies, there's some gray and there's some white. So there are people lowering their bid, raising their bid, lowering the bid. Forget about the sellers, just the buyers right in here. And all of a sudden, it's only pretty much people motivated by raising their bid. No coincidence, it gets gray, it rolls over. So let's go show that other spot. Where was it? Right in here. So this is what's important. When the iceberg shows itself and then he moves down one, okay? If you're in an unhealthy mental disposition, you're not going to see what's in front of you, just like anything else. You know what I mean? As soon as you get emotional, it's like the blinders go up. Now, watch this. A couple things we know about this. First of all, it started here at 88 and it moved to 87. All right. And we know when we flagged it right in here. So it hadn't been in too long. And we do know that usually after a chaser gets filled, it goes up. But let's watch this. I had just come back into the room for this. So I didn't talk about this in real time. But I've talked about these situations so often, which is the probability of what happens when you see this. And so the market, many more longs than shorts, right? And it's bearish, and it is, right? Does what it's supposed to do. Let's back it up there. If you were like, Anthony, I was trying to buy this thing through 87. And I'd be like, well, why? There's 17 shorts and 119 longs. That was my impression of Dale. Just kidding, Dale. So we get a lot more longs than shorts. And it does what it normally does when that's the case and goes down. All right. Now you see this jump because of this red. Before I seen this number get closer to even and balanced, I knew it was gonna because I seen all this red come in. The whole point of this is that iceberg's a magnet, and if it chases again, boom, it should pop through it. This case, it didn't chase it again, but they went up and filled it. So you kind of get not so much of a disparity between longs and shorts. They're coming more to even. And when they get up to that iceberg, they're almost even. There they are. Boom. Now, you never know if it's going to run through as much as it ends up running through. But you do know a couple things. You know you're going to have buy stops above it. And then what do you have? Buy stops above it. Shorts puke with buy stops, right? Do we know that? Like the back of your hand? Shorts puke with buy stops. Buy stops are mostly used for people that are short to cover. And usually that trade they're covering is a loser. And the word cover means exit. Now, you see 152 covered. Why? They're short underneath the big sell order because most people, oh, sellers, I want to be short. Fine. When that sell order goes, so does price. So it gets through there. And right before it gets through there, you had the OPP go balanced. All right. The OPP go balanced. And the laser go red. So it pops through there. Look at the people who are short chase this thing. There's people who are already short. The people who get short in here chase this thing. And that's part of why it rallies. They have to have buyers chasing. You want to get better at seeing different nuances that with this tool that are going to help. You gotta effing record and replay. Work hard at doing that. Working hard in this business is not trading all day, every day. It's not making more trades or less trades. It's looking at the markets this way now with the recording functionality to be able to go back and look at the tools we have to see how can I better use the 60 minute? How can I use the 60-minute OPP for a step 1 or step 2? Make it your own. If you're waiting for Dave or me or Dave or Tom or some of the other guys in the team room to have all the great ideas, don't. When it's your idea, you will make more use of it. All right. So you could see a total of 251 buy stops came out in this entire bar, most of them right above the iceberg. You could see it with the red hollow blocks, and you could see it with the little profile Dave added. And you know why the buy stops are set above the iceberg, sell iceberg, and now you see them, and you're like, holy shit, they really do know buy stops. And this is the obvious one. And then the ones that are not obvious, we're tracking, we're seeing them. So when we go through this and you could see the pop through that iceberg, your thought is it's still strong. Working on a location to play from the long side is your next step. But this context said it's strong until something else transitions us down, right? So, you have another seller come in, could be laughed at. You got a nice imbalance already in the OPP. You had longs puke a little bit. So you could look for this to happen. You get a little head start, and the market does end up going. Now, as we move through here, right here, you have all these buy pulses. None of them are really laughed at until this little down bar and all this green, and this became, watch this. Look at how out of whack that is. But we've already rallied a lot. You got to be careful of it coming tighter. Boom, it comes tighter. You should know it comes tighter without even looking at these numbers, because you see all this green come in. Then you see this thing move lower. Then it's below some of these buy pulses. And now it doesn't mean you had to already see it go down to know the objective reasons why it probably will go down. So you got to be excited about OPP on a 2-minute, OPP on a 60-minute, OPP on a 15.5 hour, the puke tool on 6 minutes, the puke tool on 8 hours, and now the chaser also, and now the profile Dave added, because we are going to now continue to streamline having to watch too many charts. I used to love to have a ton of monitors and just been able to streamline so our eyes could just focus on a couple or just one or just what matters. And now with a focus on this profile, watch how we find where profilers are stuck. The typical profiler who does the popular profile setup, the John Kepler special, the Jim Dalton 2-for-1. What was the book he wrote? Well, whatever. We're going to see where they're wrong based on reading this profile, which is just a simple volume profile. And then we're going to match it up with a better profile, which is the profile of other people's positions, profile of where most buy and sell stops come out, which are pukes, and then a profile of our chaser, which is constantly moving in and out. Great stuff. It only gets better, but it's because we're on the right path of focusing on stuff that actually influences price, actually can give you and does give you oftentimes a predictor. All the other technical tools and stuff that's done by math, or however they find the standard deviations of the lines you see in so many charts, I don't like to disparage a lot of it, but they're hindsight at best. They're hindsight. Stochastic, relative strength. If it's a fourth or fifth thing you're looking at using, fine. But get into how do the people who make the most money, how and why do they do it? There's an edge they have, man. Paul Pelosi is not a great market timer. He's not good at R&D. He's got information that most of the rest of the people don't have. He gets it someone first. Information and other people's positions. Will and our greatest two predictors of all. So we don't have Paul Pelosi intel. We don't have economic numbers intel, but we do now get a look into other people's positions.